All right, folks, it is the guy with the bow tie checking in with you live for another edition of Business Benefits. All right, out in sunny California, we have Miss Chandra, and I don't want to butcher your last name, so I'll let you pronounce it naturally.
It's Aduse.
I do say. I had a feeling that was it, but I don't want to butcher it and let you say it phonetically for everybody out there watching. If your team live throws hashtag team live, let us know where you are. If your team replay, we appreciate you. Put hashtag team replay. So we're doing an East versus West edition. I'm here in Georgia. She's in California. So what's it like in California right now? Because it's pretty murky over here in Georgia today.
Yeah, it's actually pretty warm outside. So it's a good day.
Perfect. And then we met via LinkedIn probably a month or two ago. And I love the information you had. So I had to get you on here to share this because especially with COVID-19, a lot of businesses looking for ways to kind of cut expenses and save money. So for people that don't know who you are and don't know what you do, kind of give them a reason why they should listen to you.
Oh, well, first off, Daryl, thank you for having me. I was really excited to join you live today. Did all my preparation ahead of time, including getting this little one asleep on my back.
Perfect.
A little bit about me is I started a business back in 2018 to support the small business owners out here that may not have been aware of some strategies that they have to reduce their taxes, to increase their cash reserves, and ultimately build wealth and benefits for their employees.
Perfect. So what kind of made you get into that? I know you have an interesting background. So what kind of made you start in that area of expertise?
It's evolved organically. I've had an interesting path to getting here. I served in the military for about 6.5 years. And then when I got out, I started doing project management and consulting for various large corporations. And I was even a process improvement consultant for one of the big four accounting firms out here. What led me to ultimately being a small business consultant and supporting the business owners is my last role in corporate America, where I saw that's how some of the businesses would fold or would not be as successful financially. And it's really about them not knowing or not asking the right questions as far as what they qualify for, who they can talk to, and how they can really take the funds that they have, the reserves, the profits, the revenue, all of that, and translate into something that will keep their business in business for a long time, as well as sustain, growth and ultimately, set themselves up for success when they are looking at business succession planning.
Okay. But that's definitely relevant right now because obviously we have a lot of businesses kind of struggling and you're looking to make $1 out of a penny right now. So kind of 10,000 foot view, what's the basic premise when your headline says I turn expenses into profits? I'm sure you're getting a lot more hits right now on your profile because of that. But 10,000 foot view, what does that mean for business owners?
So it's for businesses that have a lot of insurance they're heavy on the insurance side, meaning that their businesses carries some risk, but those risks are extremely expensive for whatever reason. And they find themselves spending thousands, tens or hundreds of thousands of dollars in premiums annually. And what we're able to do is take those expenses, right? Because normally when you spend money on insurance at the end of the year, you don't get any of it back, right? It's just an expense that you just chalk up to business, right? But how we look at it is, okay, well, if you're spending all that money, how do we help you keep all of that at the end of the year if you haven't filed a claim? And so that's really what we're about, is looking at taking those expenses and turning them into potential profit for the company if no claim has been filed. If they're running their business smoothly, managing it smoothly, they're not having to pay out a lot of claims, then they're able to partake in this type of program.
Perfect. Okay. So what would you say is like a typical niche that this works good for? Because I know business owners will watch this and say, hey, can I do that? So what's kind of a good niche for this kind of program?
Excellent question. Excuse me. There's a lot of grass flying in the area.
It's part of being live, working at the COVID-19 home edition. While you're cleaning your eyes, I watched SNL. Have you seen SNL since this happened?
What's that?
You watch SNL Saturday Night Live since this happened?
Oh gosh, no.
Oh, so they're doing the Saturday Night Live at home, which is incredible of its own thing just to have to do that at home. But it's very interesting to see this entire show that's live.
Right.
Gets up at home. So that's why I can appreciate this right now. But go ahead. So what's the niche that this works well for?
This works well for folks that they're carrying a lot of insurance, let's say pollution, cybersecurity, things that are trying to prevent them from external forces in the environment, or internal threats such as security that are carrying a lot of, are carrying extensive premiums. Let's say you're also a business that takes credit card via online, right? Via online payments. This would also be beneficial to you as well.
Or is it e-commerce specifically, or does anybody taking credit cards online?
I would say anyone taking credit cards online. The caveat is that what businesses that it's not good for are for those that have a lot of or have high workman compensation coverage, like roofers, or even some folks in the construction industry.
Okay, so why is it bad for them? Is it because they have a high claims loss usually?
Right. It's attached to the high claims loss. Now, if they've had a run loss that has been very positive or not any claims been filed, then it could be taken under consideration. Okay,
so well-managed construction or, very different OSHA and things like that, they might be okay with this.
They might be okay. That definitely, some areas of the construction industry are on a case-by-case basis. And it's really about, well, how many claims have you been filing for the past 4 or 5 years?
Okay, so we're talking high level, so let's get a little deeper. So we're saying this is a way to turn expenses into profit. So what actually is the vehicle? Because I think people hear that and think, oh, she's going to give me a lower rate, or she's going to cut my coverage. So what does that really mean when you say turn expenses into profits?
We're really talking about captive insurance for small businesses. Okay. And there's definitely some requirements, some qualifiers for businesses to partake in that. One of them is, do they have extremely expensive insurance premiums that they're paying out annually? And captive insurance is about taking those insurance premiums and then translating it into a way for not only for the business owner to protect themselves, customize their own insurance plan, but also take advantage of some of those tax reduction strategies that are involved with a captive. And then those reserves can also be reinvested into the business to improve quality of life for the employees, as well as increase cash reserves for the company, and ultimately protect that company against risk in a more meaningful, customized way.
Okay.
To give you an example, there is a company that we were paying exorbitant amount of money in insurance, and one of it was for anti-pollution. Now they sell computers, and just the computers, and they resell that to a different market. And their vendors or their customers require that they keep this anti-pollution policy in place. And a large portion of that was to dispose of ink. Now, we all know that computers, you're not putting in ink cartridges. So it was kind of a waste of money, right, that they were having to pay for, but that was a rule within their requirements for their customers. So through captive insurance, they're able to customize how they are insured. They could get rid of something that does not pertain to their industry at all, such as that ink cartridge component of their anti-pollution policy, and then really cater to what they really need so that they can, again, cover themselves adequately through their own insurance subsidiary,
Mhm.
and then also reinvest that money in different and unique ways to better themselves and their employees. And that's what captive insurance is really all about, is making that business more efficient when it
Mhm.
comes to where they're putting their dollars, and ultimately improving quality of life for the business owner, the employees overall.
All right, so the phrase, I know when you and us first talking a while ago, captive is taken different ways in different industries. So for
Right.
people that aren't really in the insurance world, or they're in a different kind of insurance world, let's break down the word captive for them so they kind of understand what that means from the lens you're talking about. So what is a captive for business owners?
Great question. A captive is actually an insurance subsidiary that the business owner owns, and all of their insurance premiums will then be paid to their subsidiary so that they can customize their own insurance plan. So let's say your company name is Company A, right? And then in order for captive insurance to take place, you then form a subsidiary, a company underneath your parent company A. And
Okay.
that is now your insurance company that's captive to your business, and it only insures your business.
Awesome. Does a business owner have to become an insurance agent to do this, or do they use their existing broker? How does that usually play out?
Absolutely not. They do not have to become an insurance agent to partake in this. What happens is they can still keep their original insurance broker, and
Mhm.
that broker can play one of two parts. Either they can help them renegotiate their policies on the reinsurance market. They can also take a portion of their insurance needs and put them under the captive while the broker manages some of those insurances that, for whatever reason, just don't make sense to be a part of the captive. Or the insurance agent can take on a more consultative role and assess their risk management going forward. We've seen, for the most part, a lot of, if not all of the captives still have their original broker in place to
Mhm.
support them not only through the transition, but for years to come.
Okay, so good. So then this brings an interesting question. Andrew Saul, hey Andrew, thanks for checking in Texas. He said, with the captive, are you assuming more risk?
No. With a captive, that's a great question. With a captive, you're actually reducing your risk. So in order to form a captive, just to get a little bit deeper into the details, there's an assessment followed by like an actuarial study. So imagine if you're applying for insurance already, let's say, for example, homeowners insurance policy, right? Based on, the typical houses in your area, an actuarial study will show, the percentage of homes that are going to run into challenges, whether that be it's in a floodplain, it's in a, like in California, is it in a fire zone, stuff like that. So an actuarial will come out and assess your company looking at past years, 4 to 5 years of how you filed claims, if you filed claims, how are you currently covered, and what type of coverage you'll need in the future. They'll make an assessment. They'll say, based on this, these are your actual insurance needs.
Mhm.
A lot of times, 8 out of 10 companies are underinsured in certain areas because the cost is prohibitive. So they'll say, you know what, we'll take a risk on cybersecurity, right? Because the insurance may be too high in their area. Well, we all know that if you have one cyber attack, that translates to close to $680,000 in financial loss for that company.
Mhm.
And I don't know about you, Daryl, but I don't know too many companies that can come back from just losing $680,000. So when people say, do you carry more risk with the captive insurance? No, you do not. You're able to customize and calculate and plan for those risks that were cost prohibitive before, are now, because they're being able to be customized, are now something that your company can take into consideration and put towards their insurance dollars to better protect themselves going forward.
Okay, so it sounds like with this structure you're mentioning, the owner basically just decides to do it, but the broker is still kind of driving the ship on all insurance questionnaires. Basically, he's driving it. Is that what I'm understanding correctly?
Absolutely. For businesses that have a really good relationship with their broker, this is key, not only for keeping that relationship in the future, but also helping them set up their captive so that they are covered for risk appropriately.
Okay, awesome. So I think right now, I mean, if you're looking at, let's say, restaurants are hurt real bad right now, I mean, that's an easy one to kind of bring up. So restaurants are kind of struggling. So is a restaurant in that realm, or does it kind of depend on their workers' comp experience right now?
Absolutely. That depends on their workman compensation. It also depends on their profitability pre-COVID.
Yeah.
And you know, what is in their future business plan going forward, you know, taking COVID-19 out of the equation, so to speak. You know, what path were they going to be on this year as far as reaching or breaking their financial goals?
Okay, so let's talk some success stories about this, because I mean, I love the idea of taking something you're already doing, because this is basically self-funding, or an idea of self-funding,
Right.
which is heavy in health insurance. But P&C, would you say this isn't common? Like, you don't see this a whole lot right now, the captive model?
Right. I don't see it a whole lot in small businesses, particularly since a lot of folks think that maybe they don't qualify for it,
Okay.
or maybe they're not in a position to look at it just yet. So a really good news story is an auto reseller out in the Arizona area. They were struggling to keep employees. The attrition rate was pretty high, and the employees just weren't staying because there weren't enough benefits. So what they were able to do is they started their captive insurance subsidiary. And then the first year, they were able to build up enough reserves, right? After taking their insurance in-house, customizing their insurance to meet their needs, they were able to build up quite a significant reserve. And in year 2, they were able to subsidize employee benefits so that they were able to keep, you know, their top employees and offer, you know, really good medical, dental, and vision plan for them going forward. So I consider that a really good news story, in that they were able to, again, reinvest in their employees so that they could continue to build their company. And the employees really, really benefited from captive insurance overall.
Man, show behind the scenes type. So what's the turnaround time for this? 'Cause I mean, right now, a lot of people are kind of struggling right now. And I thought this was, we set this up kind of pre-COVID getting as bad as it was, but what is the turnaround time for you to say, hey, I want to be a captive? What's the length of time to make that happen usually?
Right. Usually it's a 45 to 60 day turnaround.
Okay.
Right. We want to make sure that we have a quality assessment of all of the risks that could potentially impact your business. And we want to make sure that study is done. We got flies. Make sure that study is done, you know, with attention to detail in mind, obviously. And so, you know, in order to do it right, the assessment's done appropriately, given enough time turnaround for the actuarial to make their assessment as well, and then work with the business owner to make that happen. We would say probably 45 days at the minimum, and then typically 60 days.
Do you think the reason small business doesn't do this a lot is basically lack of understanding, or, you know, lack of exposure to this kind of concept?
I think it's a little bit of exposure to the content. You know, we're so used to seeing large companies do this. Most, if not all, Fortune 1,500 companies have some form of captive insurance in place to mitigate risk. You know, larger companies like Boeing, Northrop Grumman, BAE Systems, Airbnb, Uber, Lyft, you know, they all have a captive insurance component to how they manage their business and how they manage risk. And so a lot of folks in the small business category, you know, small business category is pretty broad, and they're just not, they just haven't thought of that in terms of, okay, how do we implement something like this in our own risk management strategy?
Well, do you think that's because, I mean, is that a hurt to the all states, the American Family Insurances, the Nationwide? Is this an impact to them, or this would actually benefit them too if more businesses did this?
That's a great question. You know, it would probably benefit those companies as well, seeing as though, you know, these companies are also on the reinsurance market. So they're already, you know, for the most part, funding some of these captives, at least in the beginning.
So, I mean, 'cause I just feel like it's one of those things you don't hear when you look at a packet of how to start your business or running a small business. I feel like captive isn't mentioned anywhere in the conversation. So, does the most of the owners you work with, do they come to you, or is it kind of your outreach and based on their size?
A little bit of both, outreach and then by referral. So I've had folks come to me saying, hey, I heard about this program and I want to work with you. And then I've also done some outreach as well. Like, hey, I've noticed that, you may be a great candidate for an alternative risk management solution, and whether or not they're open to that.
Mhm.
So that's basically how we've been attempting to spread the word to more small business owners.
What do you think is the biggest reason a business doesn't like they qualify? Well, let's start there. Have you had people that qualify and say, no, I don't want to do that?
Yes.
Okay.
And the reason why they don't want to is they're not in enough pain just yet. Right? Like, you approach a captive, you look for captives when you are just sick and tired of paying so much money in your insurance premiums and other ancillary costs that are around, just a traditional model of paying for or covering your risk. And you're sick and tired of being sick and tired, and you go, there's got to be another way. And that's when you come and investigate captive insurance for your business.
Okay. So you're not doing a lot of startups, and you're probably doing always 5 years minimum, something like that.
Right. We've had businesses that have been in place a while, and they've grown significantly. Their profits are there, but then now they're just getting hammered in insurance and other expenses, and we help them, figure out a better way of doing business and making sure that they're covered at the same time.
Okay, and I think when you and I talked about this, the broker actually walks away in the same position or better sometimes. Is that correct? Like, will the broker be impacted negatively by this?
No. I will say that if the broker has a good relationship with the business owner, then they won't be impacted by that, if that makes sense.
I get it. So if you come in there saying you're about to save a whole bunch of money and my broker never told me I could do this or even try, that's where it could be a bad situation, kind of.
Right. Which is why we like to broach this to the broker first.
Okay.
We never want to broach this to the business owner, because then that gives the perception that we're trying to cut out, the PNC broker, which is not the case. The PNC broker can make or break this as a successful opportunity for the business owner. And so we would always go to them first and say, hey, have you considered this for your client? Because it's a win-win for both of them.
Okay, if you go straight to the broker, I mean, if you go to the business owner, that means you define the broker. If they say, hey, I'm mad, I don't want this broker anymore, then you almost going to start that all over again to find them a broker to run the captive. Is that right?
Well, we do have brokers available in that situation, but it's rare. We really push towards working with their broker, unless for whatever reason that broker business owner relationship is not there.
Yeah, that happens. That's true. And Andrew had a question. He said, what if there's a significant loss before a significant surplus is amassed? Now, Andrew's in the insurance world, so he's going to hit you with the good questions. So significant loss before a significant surplus is amassed.
Well, that is very rare, but if that happens, then we take a look at least if that happens, you're on the reinsurance market. So that first year where it's, we're doing that change, your insurance is actually at the reinsurance market or the wholesale market. So you're still covered while you're building up that reserve, right? So let's say you get hit with that cost. Yes, luckily you're on the reinsurance market. You're able to cover that, but then that does give everyone in that has been involved in setting this captive up a pause. And then we have to refigure, okay, now that we've had this loss, how does this look going forward? And so that may readjust the timeline to get you fully self-insured. That may also increase coverage in one area where we thought we didn't need coverage. You see what I mean? So that captive would probably be slightly delayed, if that makes sense. We'd stay on the reinsurance or the wholesale market for a little bit longer than anticipated while we figure out what exactly our insurance needs going forward. Because, again, in order to do the actuarial study, it's based off of the past 4 or 5 years, right? Mm-hmm. So if we have a new data point, if you will, in year 0 when we're trying to form the captive, that obviously will change how we look at risk for that particular company and what our timeline is to be fully self-insured going forward. Now this event may make us pause and say, okay, why don't we have this covered traditionally, right? And then figure out how to cover or figure out going forward what other risk we should take in-house underneath the captive. I hope that answers your question.
No, I understand. I think it just means like it can affect it, but it's just more of a timeline thing. Like the concept is still out there, but you might have to wait to make sure the numbers line up. Like if you get a cybersecurity loss right before, then you say, hey, we didn't think we needed cybersecurity, but now we need to beef that one up. Is that kind of the idea?
Right. Because you're still covered on the reinsurance market when we make this move. Right.
Okay, so what can someone expect? Like I'm a business, I have 5 million in revenue and I'm going to a captive. What's kind of a range of expectation? I know it's all different across the board, but what should I expect to happen after this is all done? As far as a profit, let's say for profit standpoint, what should I kind of have? Because I don't want people to walk away from this thinking I'm going to have the 50% profit increase if I get a captive. A range of expectations I have for that.
Right. Well, okay, that's a great question. So let's say for round numbers, you pay an exorbitant amount of insurance already, and it's at $100,000 a year that you just eat, right? With a captive, if you don't have a claim filed, you should be able to keep that $100,000. So what does that mean for you? Okay, you can either do one of two things. You can reinvest that in your business. Let's say you need to attract an executive employee or two to the business in order to really grow that. Or you can use that as your cash reserves, your personal bank to cover future insurance needs going forward. So let's say, right, no losses the first year after you've implemented your captive, no losses the second year. The third year, something crazy happens like COVID-19, and you find yourself in need of cash reserves. Well, luckily, you decided that you were going to just hold that in various pots underneath your captive, because also you can take those cash reserves and invest them however you see fit. So if you invested them in municipal bonds or stocks, what have you, now you have this reserve to keep your business afloat, to help your employees, to shore up whatever infrastructure you have so that you can weather storms like this and continue going forward.
The interesting thing when you describe this is the same way health insurance runs. I mean, right now, a big question is, will health insurance go up next year? And they technically can't unless they have to go into their reserves in a deep way. So this is the same concept for your own business, saying if you didn't have anything happen, that's just quote unquote free money that's just been kind of sitting around. So do you see most of your clients are reinvesting into the business or just kind of saving it? What's the most common positive you see they do with the money?
I see a combination of both. Okay. So they're increasing their reserves, right? Because they are self-insured. And if for whatever reason they have a claim that needs to be filed or a loss at some point, they're able to cover that, no problem, business as usual. And then they also reinvested into the business. I've seen a lot of folks reinvest in their employees, which is wonderful to see how much business owners care about their employees, because, they're the workhorse. They're the reason why they're able to grow. And so we've seen folks contribute to benefit plans. We've seen folks contribute to paying off, college or student debt. We've also seen folks create scholarships for employee children. So I think it's a wonderful option for business owners that meet these qualifications or requirements and are able to implement a captive for themselves and their employees.
Okay, awesome. You also mentioned some tax strategies that come as a result of doing the captive, and we didn't get deep into that, but Obviously, nobody likes taxes, so kind of give us a fourth grade version of how do these tax strategies work with the captive?
Right. When you take in or when you form your own subsidiary, there are a few tax strategies or tax reduction that can take place up to a certain amount of the reserves that you put in there. So, let's say you were had a micro captive, which is a very small captive. You're a small company. You're a smaller company. You qualify for a micro captive. You're able to put away 2.3 million tax free, and with that tax free pot, again, you build up your cash reserves and you can reinvest in your business. So there are strategies like that. It does knock you down into a lower tax bracket, depending upon what cash reserves you're looking to build year one, and what you were qualifying beforehand. That's definitely on a case-by-case basis without knowing everybody's tax situation. Normally, it does contribute quite a bit of a tax savings in year one and going forward.
Awesome. Okay. And then I forgot to check in that Andrew said that makes perfect sense when you describe the running the captive. I want to do a quick check for you. If you've ever heard of a captive, and Andrew sounds like you have, so no reaction from you, Andrew. But if you've heard of a captive, do a favor, throw the heart reaction for me so I can kind of look at that. Because for me, honestly, captive in the benefits world, or even the PNC world, usually means you're a captive agent. You only work for that company. So I'm sure you get that confusion a lot talking to people like, are you captive? And they're like, no, and they don't understand the concept.
Yes.
So what's the size? I think we talked about that, but I want to recap that the revenue. Like, what's the average revenue you're looking for that a captive works very well for? Because you mentioned micro a minute ago. So what's a really good revenue starting point?
Good question. So micro is 5 million gross revenue. Okay. And then it can go up from there. Small business is such a broad term. So they're really looking at folks that have 500 or employees or less, and then a minimum gross revenue of 5 million.
Okay. So is the reason that's the revenue because they have the cash to absorb it, or is it because of the loss ratios aren't quite there if you're lower?
Well, it's the cash, the ability to build up the cash reserves needed to self-insure.
Okay. Perfect. So again, I'm going to stress this because I think COVID-19 is a perfect example of you got to get creative and figure out new ways to kind of deal. So I know you mentioned profitability pre-COVID-19. If somebody's profit is hurt right now, what can they do in regards to the captive? Do they have to wait this out, or can they still do something?
Well, it depends on what type of cash reserves they have available now. Okay. If they're not there, I recommend getting with their team, internal team, their accountant, attorney, and see, how they could apply for some of these SBA loans that are available. Now, I know the loan process is as clear as mud. So
and that's a good segue, though. I mean, you've been posting a lot of stuff about the SBA loan process. So what's your experience right now in California? Because Georgia is kind of a little different here, but what's your experience in California with it so far?
There's been a lot of confusion as to who qualifies. And the first weekend that they had it out, there were a lot of folks that went out and applied. And then larger banks like Wells Fargo, Bank of America shut it down over the weekend. And so there was a lot of confusion. Is this still available or not? And so I know some businesses that could benefit from this program are kind of sitting it out a little bit to see what's going on, because it's such a fluid situation. Thank goodness that Congress rushed to get the stimulus money out there, but the rules are changing quite rapidly on who gets qualified, how do you apply, what type of information do they need, that folks are just kind of sitting still a little bit to see, okay, are we done, changing the rules, so to speak? Right. Is there some continuity between how we're going to get the funds to us, and what exactly do they need for us to qualify for this amount of cash?
What's something recently that's changed that you think a lot of people don't know about the all the different SBA money out there right now?
One of the things that has changed is the terms for the Paycheck Protection Program.
Okay.
Originally, I believe it was posted at 4%. They since reduced it to 3.75, and terms are negotiable. So I said up to 30 years, but that means that you would work with your SBA lender on terms that are favorable to you. Personally, I've never seen anything like this before, where you can negotiate, a business owner can negotiate their own terms for a loan. And so I think it's a good time to apply for a loan if you need it, because COVID-19 has just completely changed how, we're able to acquire money for our business during this tough time.
Okay, so there you heard it, folks. You can negotiate if you want to, if you need to. And I do feel like it's everyday changing. I saw something about the advance portion for the $10,000 advance. Now it says up to 10,000, where previously it just said 10,000.
Right.
So, it's definitely a confusing time.
Right. I even put out on my own profile that, because it's such a confusing maze of information, I was willing to help any company out there that's looking to apply for an SBA loan, specifically the economic crisis loans, who have 3 to 10 employees. More than happy to help navigate them through that process and get them the funds that they need to sustain themselves.
Yeah, because unfortunately, we're going to see a lot of people not sustain through this. So I appreciate you doing that to help them make it through.
Right. I just want to say that that's free of charge. We're not charging anything to do that.
So I'll make sure I put a comment in there about that for 3 to 10 employees free of charge. And that's a lot of businesses. I mean, people don't think about it, but probably 80-90% of businesses are 3 to 10 people.
Right.
So it's great you're doing that. So I want to be respectful of, I know your assistant's on nap time right now, so I don't want to have to run out, because mine just ran in a second ago. That's why I had to cut myself off screen. It's like, hold up, I'm on live right now. So it was me, not you this time. I know you're worried about your daughter, I think, right?
Yeah, she's 3, so I'm fingers crossed that she doesn't wander out here, and that this guy stays asleep for a little longer.
Mine's 2.5, so same bucket. So what's some information you leave with the people to kind of help them understand Captive and kind of bring it on home so they can think about this for their business to help turn their expenses into profit?
Right. Thank you. Captive Insurance is an alternative risk management solution for your business. If you are, basically you want a captive if you are sick and tired of spending money that you can't get back and turn into profit for your business or better support your employees. That's what Captive is all about, making sure that you're covered appropriately, that you're using your money wisely and efficiently, and that you are generating cash reserves to make your business profitable for years to come.
I like it. That's a great summation of everything. And if I had 5 million revenue coming from 10 employees or more, I'd want to do it all day. So
right.
For me, it's just agents, but I love the idea of that. So folks, you're going to see Chandra's information on the feed. Feel free to follow her, connect her, and any other social media platforms you want them to follow you on, or a website.
I'm on LinkedIn, and just I love to have you guys follow me there for more content.
Perfect. And this is the content wars now. So we're trying to give you good content that's information.
That's right.
Not just hearing about COVID-19 all day, but I appreciate you guys for tuning in. We'll catch you next time on Business with Benefits. Thanks, folks.
Take care. Thank you for having me.